Everybody, this is Jim at SB500chart.com. It's a little after 1 o'clock on Sunday afternoon, December 7th, 2014. And for those of you who might be in the military or veterans, you remember this was Pearl Harbor. So don't forget that. That was a dark time in our nation's history. That is, if you are an American living in the United States. If not, then don't worry about what I just said. This is just something that's kind of near and dear to our hearts, where we live in this country. So before we take a look, I want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And please, make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. As we've done with the last few weekly reviews, we start with a long-range view of things. And for this, I think I'm going to kill my moving averages because I don't really use those so much with the S&P. But for one of the reasons is that the S&P has been over the top of every moving average that you would think would be significant, that maybe we'll move to them at some point in time. Here's what's interesting in the long range. We have a series of bounces, each one being higher than the next, until here. This was a lower low, obviously, than what we had set back here in August. At that point, it appeared as if maybe our rising trend that had been more than 2 years long might have been in jeopardy. You can see that this trend actually kicked off. I think we need to go to a 2-day chart here. Actually kicked off back in the fall of 2011, right here, and it's just been moving up in an inexorable path for about 2 years. Now, you will also notice that there have been times in the history of the S&P where we would have a series of lows that seemed higher, like here, 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 even this one, and then boom, we get a little corrective move, but then we get a recovery. And typically after the recovery, there's some little, dancing around, a little giving back some of that back. And it wouldn't surprise me if going forward, this big move off of about 1820, I'm going to call it 1820, to where we are now at 2075, some of that's going to at some point get given back. It's just, I don't think there's any two ways to look at it. I don't think there's any way to look at it where that would not be a reasonable expectation, especially when you see the degree that we bounced off of 1820, and even bouncing so hard as to regain this rising red channel. That did come as something of a trend breaker. And what I mean by that is typically when you have a support line that has been this well established, typically when you break that, it's not easy to get back inside or over this broken resistance line. And it broke by a good bit. And yet here we are, actually now above the midpoint of these two red lines. So if we zoom in now and look at a 30-minute chart, let me get situated here. It sort of looks to me like this past week, we started the week with some weakness that led me to redraw a trend line right here. And we're sort of looking at a situation right now that is one of those, well, an ink blot test, if that's a good way to explain it. If you're a bull, you see this as a potential neckline of a very small inverted head and shoulders continuation pattern that might be forming. It has not formed yet, but it might be forming. And if it is, we are starting the right side of that pattern with an inverted right shoulder. Maybe. If you're a bear, you're seeing this as potentially, since this has a slight upslope to it, you're seeing this as a potential rising wedge that once this lower line breaks down, then we will be looking for the loss of a significant few percent, I would think at least, to come back and retest some support levels. I don't think this would be the end of things. If we do break this line, that in no way compels me to say 2075 was the top. I don't think it is. I still think we look for the target from our inverted head and shoulders pattern right here. And again, I remind you, this is one of those kind of funky looking ones that didn't spend much time at all on that right shoulder. But we've seen this happen 2 or 3 times in the past. If you're new to the website and you're new to the videos, then maybe just take a look at a chart and I'll help you. Go back maybe to February of 2014, because that's another spot where we had what appeared to be an inverted head and shoulders continuation pattern, that we had the left shoulder, we had the head, but nothing much in the way of a right shoulder. And we've had some smaller ones as well along the way, but that's the one that really comes to mind. And yeah, so go back and take a look at that. It's happened before, but when you're looking at a daily chart, this is really, I think, about the only one where you see that happen in pretty unmistakable terms. So going back to the 15-minute chart, I would watch this line right here, and I would watch this line right here. If this blue line breaks, then I think for sure we're coming down to test this. If we bounce on this and then get over this neckline, then we would have a target at that point of about, well, what would it be? Let's measure it. Measure the depth of the pattern. And let's say we break out here. Where does that put our target? At about 2108. And that's almost all the way up to our 2120. Not quite. We'd have 12 more points to go, about 0.6% more before we get up to 2120. So for that reason, by the fact that it just looks to me like 2120 is achievable. There is a resistance line right here that could put up a fight. And frankly, where we are right now with this purple line might be where this line should be. Because this line actually, the way it is drawn, it relies heavily upon events that took place 4 and 3 years ago in order to put this line on the map. So in other words, using these points back here, and one point that's a little bit closer to us, it is possible that there's enough error in where this line is established that what we see here as this little purple resistance might be this, and we're just off by by 15 points because of the way this thing is projected forward, and any error 3 and 4 years ago is multiplied somewhat by the effects of time. Is in the way of a weekly review. Like I said, the week started off literally weekly as we broke down, formed what appeared to possibly be a bear flag, but we knew to wait on confirmation of that pattern. It's not a bear flag until it breaks that lower trend line, and it did not. When we opened on Tuesday, in fact, we broke up to the upside strongly enough to where even though we had moved this line, because previously this lower line was more like, was it more like that? Something like that. I know that this pattern sort of straddled that line. So we got down underneath it and we broke that line, but the rally was so strong that we actually were able to get back over the top of this line, and we back tested it once to make sure we were indeed back over that line, and we stayed over it for the rest of the week. However, I'm still putting this here because I do believe where this bounced is a more technically significant area than any of these smaller little bottoms along the way. This came after a roughly, what was our high up here? Let me measure it real quick. 2075, 2049. So that came after about a percent and a third, a percent and a fraction, a sudden dip down, and then a quick recovery. So guys, rather than take up more of your Sunday afternoon, I think I'm just going to let it go at that. It appears to me that we are on the way to meeting the target of 2120. I believe this pattern back here is the driving influence in the markets right now, and I'm content to let that pattern work out. If we do come back down and we give up a percent or two, then I don't think it's all over. I think we still have that target, and we could very easily come back down to 2020. We could easily come back down to 2015. You name it. There's a number of levels that we could come to. This red line comes to mind. In fact, I wouldn't consider this pattern busted until we would lose about more than 125 points and come down and violate the neckline of that inverted head and shoulders pattern. Because the rule of thumb is this: there is no rule that says you make your target on the initial move up. Oftentimes a head and shoulders pattern will break out and it'll pull back, and it may meander a while, but eventually in the strong majority of cases you end up making that target. So guys, there you go. There's your weekend update for the week ending December 5th, 2014. Thank you for taking time out of your day to watch this. Thank you for your support. And if you are not a subscriber, go to sp500chart.com. And please think about it. Thanks. Bye-bye.